Good evening, everyone. Welcome back to this discussion on audit. So in the previous session, we started about risk assessment, internal control, and today we plan to continue with our discussion. Okay, so very important topic as we discussed in the previous session also. And it is going to continue because considered to be a bit technical as we discussed, but we'll just try to bring in a lot of examples through which we'll just try to get more and more clarity around this concept. Okay, so now if you remember in the previous session, we talked about audit risk. Yeah, and we also talked about as to what comprises of this audit risk, what are the elements of the audit risk. Okay, so there were a lot of aspects around the audit risk that we discussed. Can you quickly help me understand what do you mean by audit risk? What are the elements of audit risk? What are the audit risks which you see from the management side? What are the audit risks which you see from the audit side? Means which are driven more from the audit and not really from the management. And what are the ways through which this can really be managed? Quickly, over to you before we get on to our discussion for today. Okay, great. So I can see a lot of responses. So Hardik is saying detection risk. Mahalakshmi says inherent risk. Okay, great. Then I think I am missing out on this name. Sai Charan is saying sampling and non-sampling risk. Okay, great. So Hasi is also, I think, talking about the similar type of risk. Yeah, so, but when it comes to the audit risk, can you just give me a brief overview of what do you consider as audit risk? Yeah. Okay, I think this response comes from Pooja. Yeah, so she is also talking about the audit risk. Now, in terms of the audit risk, we discussed there are mainly two elements. One which is coming from the management side and the one which is coming from the audit side. So one which comes from the management side was risk of material misstatement. Okay, under which we discussed there are two components. One was the inherent risk. Second was the control risk. And when it comes to the detection risk, that is something which flows from the audit. Okay, over which auditor you can say has got control, wherein we talked about sampling and non-sampling risk. Okay, so this was briefly about the audit risk that we covered in the previous session. Now, as far as this audit risk is concerned, now what is the objective of the auditor? The objective of the auditor was to form an opinion, right? Form an opinion as regards the financial statements, whether they are free from material misstatement or not. And for doing this, assessment of the risk, remember, assessment of the risk, whether you look at the financial statement as a whole or whether you look at some of the assertions only, wherein you talk about any account balance, classes of transactions, disclosures. Yeah. Now this becomes the objective of the audit. Now, so today, what we are going to do is we are going to spend some time on this assessment of the risk of material misstatement. We have understood the meaning of risk of material misstatement. We have also understood the components, means what does it really comprise of. But now we are also going to spend some time again briefly on this aspect as to how the auditor will identify that. Okay, and once this is identified, how is going to assess that? Assess in terms of how it is going to impact the financial statements. Because the overall objective is what? The overall objective is to ensure that this risk is minimized. Because if this risk is minimized, then the objective will be achieved. Or you can say objective will be better achieved. Yes or no? Yeah. Now one way through which this identification and assessment is possible, we can say, is through the understanding of the entity. means understanding of the business, understanding of the company, means understanding about the entity which is required to be audited, and understanding of its environment, means the economic environment in which the entity operates, understanding of the internal controls of the entity. Okay. Now, how is this relevant? How is this going to help the auditor? How is this going to help the overall audit process? So this is going to be, you can say, one of our discussion points for today. Okay, so we are going to discuss this at quite length. As of now, we are just broadly talking about this risk assessment. Means one of the ways through which we can identify and assess the risk of material misstatement. How do you achieve that? That is achieved through understanding the entity. Now, why is this understanding important? Because if you understand about the entity, its environment, its systems, its processes, that is when you get to know as to what can go wrong in respect of that entity. Right? Yeah. Now, as far as this risk of material misstatement is concerned, okay, if the auditor has to identify them, assess them, now there again, what becomes important is to understand that at what level this identification will be done, at what level this assessment will be done. Now, this may look repetitive to you, but this is again very, very important. So there again, at every point of time, you need to remember that this identification and assessment can be done at the financial statement level or assertion level or both. Now, this will again depend on the entity, depend on the audit, depend on the process which is followed. Okay. So generally, if you talk about an audit, so audit will involve this identification and assessment at both the levels. Means one cannot say that we'll look at the financial statements as a whole. No. Why? Because if you have to look at the financial statement as a whole, then of course, looking at the account balances, classes of transactions, disclosures on an individual basis is important, because till the time you don't understand them on an individual basis, you don't assess them on an individual basis, you will not be able to understand their impact on a financial statement level basis, right? And once this understanding is obtained, only and only then auditor will get to know. Auditor will get to know. What will he get to know? He'll get to know about his audit procedures. Means what all audit procedures he need to perform. Okay. So that's why for designing the audit procedures, this understanding becomes important. Because till the time it's not understood, of course, the audit procedure cannot be designed. If the auditor cannot be designed, design means thought through, planned. So if you don't design them, if you don't think through, if you don't plan them, how do you perform them? Can you really perform them? The answer is no. Answer is no. Yeah. So this is going to be one of the objectives of the audit. Yeah. Now, as far as this objective is concerned, we have already discussed that this objective of identifying and assessing the risks of material misstatement is concerned. What is going to happen? Auditor will obtain an understanding of the entity, its environment controls. Okay. Auditor will assess them at an assertion level, at the financial statement level. And once this assessment, once this identification is done, then what is it that the auditor will check? So auditor will check what can go wrong. Okay, so let's suppose if the auditor has checked that in the financial statement, PPE can go wrong. Means the recognition of PPE can go wrong. Or let's suppose the recognition of salary expense can go wrong. Now, what is going to be the next step? Once these three things are looked at, next step for the auditor will be to check that if they can go wrong. Okay. So what is going to be the magnitude at which they can go wrong? Because if they can go wrong, so what does it mean? It means there is a misstatement. If they can go wrong, what does it mean? Yes or no? If they can go wrong, what would it mean? Over to you, quickly. Yes, quickly, yeah. Yes, great. Sai says there's a chance of misstatement. Great. Pranav says there's a possibility of misstatement. Very good. Now, possibility of misstatement can be understood. But is the auditor only required to look at the possibility of misstatement? No. Why? Because auditor needs to get on to the material misstatement, because material misstatement is something which will bother the auditor. If the misstatement is immaterial, will that bother the auditor? Tell me quickly. If the misstatement is immaterial, Vibhor says no. Vaishnavi says no. Great. So that's why, what is it that the auditor will do? Auditor will check that if this can go wrong, what is going to be the potential impact? Means whether this misstatement can be material or not. Okay. Yeah. So now, in relation to this risk assessment procedure, or you can say in relation to this risk assessment, now comes the question that, of course, auditor will do this at financial statement level, accounts level, classes level. Okay, auditor will also get on to the magnitude of the impact. But how will this risk assessment be performed? Okay, what is going to be the procedure? Means what is going to be the approach? So what is it that the auditor will be required to do to get on to this risk assessment? Means what are the ways through which this risk assessment can be done? Okay, so now there comes the point. Now, first way to begin on this risk assessment exercise is through inquiries of the management and other personnel which are there within the entity. Now, can you give me some examples of the company's personnel? Maybe the management or people below management level or people higher the management level, whom you believe could be relevant in relation to the discussion which the auditor needs to perform to assess the risk. Number one. Number two, when you will let me know those levels, those people, please also help me understand that what all areas will they be able to help the auditor. Okay, so couple of things you need to answer. One, you will help me understand the personnel with whom the inquiries can be performed. Second, if the inquiries can be performed, what are going to be the areas which are going to be inquired upon? Yes, over to you quickly. Any thoughts that you have? Over to you. Great. Vibhor says accountant, CFO, finance. Okay. Pranav says management. Great. Rishita says marketing personnel, wherein the inquiry will be for the marketing strategy. I can see a lot of responses from you wherein you are not giving the complete answer. Something like Rishita and Avinash just mentioned. Okay. Garima is saying head of departments from whom questions can be put across around finance. Okay, good. Omkar says internal legal counsel. But what are the areas that you can inquire upon? Anirudh is saying cost manager to know about the inventory control. Good, very good. Okay, Hardik says accountant through whom you can have the inquiries around the revenue, purchases. Then Muskan says finance manager with whom you can inquire about the financial statements. Okay. Neeru says employees at the various levels. Rishita says employees with whom you can discuss the selection of different set of policies. Yeah, great. Then I think a lot of responses have now come. Okay, wherein you are just trying to be very, very specific. Sorry, I'm missing out on your responses now. All right, great. So now let's try to discuss this with the help of some examples. Okay, I think a lot of examples have been shared by you. So I'll just try to make use of some of the examples which you have shared. And we'll just try to understand the context here. Now, what is the objective? Our objective is to identify and assess the risk of material misstatement. Correct? Yeah, that's the objective with which we are working. Now, for doing this, what do we need? We discussed that first of all, we will start performing inquiries. What do you mean by inquiries? So let's try to understand the literal meaning of the inquiry. See, inquiries simply means that you will go and ask questions. For example, if you don't understand anything in the session, what do you do? Can you tell me? If you don't understand anything in the session, what will you do? Will you stay silent or what will you do? Pallavi says we'll ask questions. Great. Yeah. Pranav says we'll ask the questions. Great. Now, why do you ask questions? Can you tell me? What is the rationale? By asking the questions, what is it that you are trying to achieve? Tell me quickly. Quickly. Yeah. So I think everyone is saying to get more clarity. To get more clarity. Exactly. So there you are. Exactly similar to the way you ask questions. When you have not understood, or maybe even if you have understood, you want more clarity, you have some clarifications. Exactly similar is the role of auditor. Now, auditor has not started checking anything. Okay. Because auditor is still in the process of planning the work. Yes or no? Auditor is still in the process of planning the work. Now, during the course of planning, he needs to understand about everything. Yeah. In the previous session, we discussed that understanding is important. Why? Because if you are able to understand anything, only then you will get to know as to what can go wrong. Yeah. So if you don't understand anything, will you be able to make this assessment as to what can go wrong? Tell me, everyone. Tell me. Omkar says no. Bhaskar says no. Nuruddin says no. Great. Now, this is a very, very important aspect of the audit. Okay. And you can say it's also in a way, because it is performed by the auditor, one of the procedures of the audit. See, something which is done by the auditor, what do you call it as? Audit procedure? Yes or no? Audit procedure. The point is that through this procedure, if we are trying to achieve the objective, what is the objective? Identify and assess risk. So that's why, what will you call this procedure as? procedure related to risk assessment, or you can say risk assessment procedure. As simple as that. Yeah. Now, let's suppose if you are the auditor, you go to a company. Yeah. So if you go to the client place, now as an auditor, who will you go and meet first of all? Of course, it will be the accounts team. It will be the accounts team. Can you tell me what will be the role of the accountant? What will be the role of an accountant in any company? Tell me, what will be the role of the accounts department? Pranav says to record transactions. Okay. VR says maintain books of accounts. Exactly. Yeah, exactly. So which means that accountant is responsible for what? They are responsible for accounting. Yes or no? Now, if let's suppose there is an accountant, or if let's suppose there's a team of accountants, whether it's the finance manager who is the head of accountant, okay, anyone, what is their primary role? Their primary role is to do the accounting. Can we say that sales, marketing, procurement is the primary role of this accounts team? Can we say that? Tell me quickly, everyone. Can we say that it's the primary role? Yeah, tell me quickly. Anirudh says no. Niru says no. So that means if this is not the primary role of the accountant, then of course, accountant may have some understanding of either of these roles. He may have a lot of clarity, but not as perfect as those persons who have the primary responsibility in respect of sales. Yes or no? Yes or no? Tell me. Yes or no? Yeah. So that's why if the auditor has to get complete clarity, who should he reach out to? Accounts team or the sales department? Tell me, if the auditor wants to understand something around sales, whom should he discuss? Accounts team or the sales department? Of course, it has to be sales department. Yes or no? So let's suppose currently it's an audit class going on. Yes or no? Yeah. And if you start asking questions related to GST, so I may or may not be able to answer some of them. Yes or no? I may or may not be able to answer some of them. But if you put across those questions in the GST, then of course you will get the most clarity. I may try to provide you, but you will get the most clarity. Yes or no? Yeah. So this is what you need to understand as an auditor also, that all of these are the specialized departments. Okay. And we are not talking about only these three departments. So for any information, for any inquiry, what is going to be the first and primary role of the auditor? That is to identify the right set of persons. Yeah. Because auditor needs to find out who should he ask questions around the area he is going to look at. For sales, it should be the sales head, or you can say the sales department. Yeah. For procurement, it should be the purchase department. Similarly, if you talk about payroll, or employee cost, yeah, by whatever name you may call it as. Can you tell me what will be the relevant department for payroll? Of course, it will be the payroll department. It will be the payroll department, or you can also say HR. Understood? Yeah. So now, first and the most important point, if the auditor wants to get the complete clarity, he has to be very, very clear in terms of understanding. He needs to reach out to the right set of persons. And of course, if he'll reach out to the right set of persons, he will not only get the full information, but he will also get the complete information, right information. Okay. So one is to understand all the points. Then of course, the next point is to make sure that all the points are understood in an appropriate manner. Yeah. Clear on this? Yeah. Any questions around this? Any questions, any doubts if you have? Clear? Okay, great. So now, this was one of the ways. So we are talking about risk assessment. Okay. And please remember, over here, we are only talking about planning. Please remember that we are not talking about execution. Means auditor is not performing the checking as of now. He is only planning his work. For planning, he needs to identify, assess the risk, for which he'll go ask questions. He'll make the inquiries. Another way through which auditor can identify and assess risk could be through analytical procedures. Now, analytical procedures is something that we have already talked about. Okay, so this is something that we have already talked about in our previous sessions. Can you quickly tell me what is your understanding of analytical procedures? Anirudh is asking, sir, is this initial assessment documented by the auditor? Yes, of course. See, please remember anything that the auditor performs. If he doesn't document, then what did we discuss? Something which is not documented is considered as not done. Okay, yeah. So now, as around the analytical procedures, Hardik says variance analysis, analysis of the accounts. Yeah, wherein you get on to the assessment of relationships, relationship of data. So let's suppose if you compare previous year data with current year. Yeah, let's take some examples. So let's suppose previous year. So let's suppose this is previous year and this is current year. Yeah. So let's suppose in the previous year turnover was 100 and now the turnover has become 90. So what does it mean? Turnover has gone down. Yeah. So that's the assessment, or you can say that's one of the analysis which the auditor will do. Why? Because he would want to get the understanding as around the operations of the company, as around the sales, as around the sales policies of the company. Correct? Now, one of the ways we discussed to do this was through the understanding, by getting onto the discussions with the management. Second way is through the analytical procedures. Now, in relation to analytical procedures, auditor will get some clarity. Yes or no? Because that's the whole objective. That's the whole objective of the audit, to get on to the assessment, to get on to the conclusions as around the risks which are possible. Yeah, because as much as information which is available is required to be looked at the preliminary level. Preliminary level means when the auditor has just gone and started the discussions. Correct? Yeah. Similarly, there is another way. What is the third way? Observation and inspection. Observation and inspection. Now, as around the observation and inspection, what do you mean? Now it means that auditor will not only be limited to discussions, means verbal discussions are done. Yeah, auditor has also looked at the numbers. In the analytical procedures, auditor was analyzing the numbers. In the third step, or you can say over here, over and above verbal inquiries, verbal discussions, over and above just limiting to the numbers, auditor will also be looking at some of the documents. Auditor will also be looking at some of the information. Auditor will also be looking at some of the records of the company. Yeah. And he will verify them. He will inspect them. Why is that important? Because he will not only rely on the discussions. He will not only rely on the numbers which are there in the financial statements. He will also go a step further, wherein any of the agreement which is available, he is going to have a look around it. So let's take an example to discuss this. Okay. Say over sales, auditor wants to have some clarity. Yeah. So let's suppose over sales, auditor wants to have some clarity. Now, in relation to sales, what is going to be the first step? Can you tell me? Now, if let's suppose risk assessment is required to be done around sales, what is going to be the first step? Quickly, huh? Quickly. Auditor will have discussions which we also called as inquiries with the sales department. Okay. So let's suppose this first step is completed. Yeah. So this first step is completed. Then what is the next thing auditor will do? Auditor will analyze the sales data. So let's suppose he came across this information that sales has gone down by 10%. Sales has gone down by 10%. So one, he discussed with the management, he discussed with the sales department. Second, he also analyzed the sales data. Now, what is the third thing he'll do? He will ask for a sample sales contract. He will ask for sample sales contract. Why? Because he would want to look at what are the terms and conditions in relation to the sales. Why is that important? Because whatever he has discussed over here, yeah, once he will get onto this discussion, he will also be able to corroborate that. He will also be able to corroborate that with the sales contract to make sure that the understanding he has obtained from this process is absolutely correct. So we are not saying that he will check all the sales contract, and we are also not saying that he will start verifying them. No, it's only on a sample basis that he will pick some important documents. It could be the sales contract, it could be the sales invoice, yeah, or it could be the sales order. Yeah. Now, as around some of these documents, which he is going to observe, which he is going to inspect, what is the objective? Objective is still the same. Can you just confirm what is the objective with which we have been discussing all of these points? Quickly, huh? What is the objective that we are trying to obtain? Yes, quickly. Yes. What is the objective? Dilip says assessment of risk. Very good. So now objective is very simple. Objective is to find out that in respect of sales, what can go wrong? Yeah. What can go wrong? Yeah. So that's what you call as identification of risk, assessment of risk. And of course, over and above this, what can go wrong? Auditor will also check. Auditor will also check that over and above this, what could go wrong? What is going to be the likely impact of that? Yeah. So what could go wrong may result into an error, or you can say misstatement. And through the likely impact, auditor is trying to analyze whether this error or misstatement is material or not. Yes or no? Yes or no? Everyone clear on this? Any questions if you have? So I think Tambeshwari has a question. Yes, Tambeshwari, please go ahead. What's the question? Yes, Tambeshwari, what's the question? All right. So anyone else having any questions? No? No questions, huh? All right. So I think there comes this question from Vibhor. Vibhor is asking, sir, what are the examples of what could go wrong? So I think very good. So maybe everyone can help you on this, Vibhor. So can you just quickly give me some of the risks which are possible in respect of sales? Sai has already answered this. Sai is saying, sir, sale might have been underreported. Pranav says incorrect sales, due to which debtor balance could also be incorrect. Pallavi says dummy sales could be there. Yeah. Dilip says sales may be overstated. Sukhveer says that because of this sales problem, doubtful debts may arise. Yeah. Anirudh is saying sales reversal could be an issue. Yes or no? Yeah. So these are all examples for you. Great. Vibhor, are you clear on this? See, there are a lot of responses as around the question you have asked. Clear, Vibhor? Great. So Vibhor is clear on this. Now, all of these points, all of this information, which the auditor is going to assess, which the auditor is going to rely on, which the auditor is going to look at. Can you tell me whether this will form part of audit evidence or not? Over to you quickly. What do you think? Whether this will form part of audit evidence or not? What are your thoughts? What are your thoughts? Yes? Yeah? So can you tell me why this will become audit evidence? Why this will become audit evidence? Quickly. Why would this become audit evidence? Yeah? Akriti say yes. This would become audit evidence because Pranav is saying this is needed to form an opinion. Why? Because any information which the auditor is collecting as around the audit procedures, as around some of these things that he is going to look at. Yeah. So this is going to help the auditor. This is going to help the auditor as around his audit process. Yeah. And something which will help the audit process, which is documented, which is obtained as an information. So that is what you call as audit evidence, because that will be available in the form of evidence with the auditor. Clear on this? Yeah. All right, great. So let's discuss some examples around some of these things that we have discussed. Okay, just to understand some of these things in greater detail, right? So now over to you. You need to answer this. All right. So everyone clear on this so far? Quickly, yeah. Quickly, yeah. Great. I think Tambeshwari has a question. Yes, Tambeshwari, please ask me your question. Maybe you can just write down your question over here. Sai is clear. Niru is clear. Tambeshwari is saying third point is not clear. See, third point is that you will not only get on to the verbal discussions. You will not only look at the numbers, but you will also go and check some record. Now, what can be the record of the company? It could be the sales contract. It could be the sales invoices. It could be the vouchers in case of a company. Yeah. It could be related to the purchase order. It could be related to sales order. It could be related to the workings of the management. Yeah. In relation to bank, it could be the confirmations. Yeah. So depending on the area that you are looking at, you are just trying to analyze the evidence through which that information can be verified, inspected. So that is something you will also want to do. Why will you want to do that? Because if you will do that, your understanding, yeah, will be in a way firmed up. You will get more clear. Your confidence will increase that whatever management is saying, whatever numbers are speaking, that makes sense. Okay. Yeah. So hopefully you are clear on this now. Great. So let's look at this question now. Jojo Limited is planning to list on the Bombay Stock Exchange next year. So Jojo Limited is a company in the process of getting listed. As an auditor of this company, identify any one reason of increased audit risk due to the listing of the company next year. Yeah, over to you. So what do you think could get to the risk? Yeah, could get to the risk, or what can go wrong in relation to the company once it gets listed? Yes. Any thoughts that you have? Okay, so I think Dishika is saying sales will decrease. Why? Just because the company is listed. Dilip is saying company may hide its liabilities to show better picture. Yes, great. Then Mithun says to check if the company is going concern, make sure it's doing running businesses future. Okay, but not really linked to the listing of the company. Vaishnavi says company can manipulate the sales. Yes, of course, that could be one of the risks which may increase. Tushar says company would want to show better financial position, even if that position is not real. Yeah, that's a risk. Bhavna says after listing, liabilities may increase. I think you're just trying to comment on the compliances, which VR is also saying. All right. Yeah. Sukhveer says insider trading. Yes. Mohammed says change in sales. Yeah. Great. So now, once the company will get listed, so company's perspective will be what? Company's perspective will be to show more sales, to show better profitability. Yeah. Because public at large is going to look at this information. They are going to get impacted. Management is going to get impacted because of the results, because of the financial information. So that's why there will be a, you can say, greater chance of misstatement in the financial statements. We are not saying that this will necessarily happen. So this risk will increase. This risk will increase. So there is a possibility of what? Intentional misstatement. Intentional misstatement. Yeah, so that's why what will happen? Risk of the audit will also increase. Why? Because audit risk not only flows from the procedures of the auditor, but it also flows from the risks of the management. What are those risks? Risks of material misstatement, right? So you can say in respect of a listed company, some of these risks are required to be looked at. Okay. Yeah. All right. So now another question for you. So I think Aisha was saying that their assets they may want to show higher. Yeah, of course, that's a risk. That's a possible risk. You're right. So let's look at this next question. On perusing the financial statements of Jojo Limited, put up for audit. Yeah, so first level financial statements have been presented for audit. It's been observed by the auditor that the current ratio has improved from 1.2 is to 1. So in the previous year, it was 1.2 is to 1. Now it has changed to, sorry, in the previous year, it was 1.2 is to 1. Now this has changed to 1.75 is to 1. So this has improved, no doubt. Correct? Now, identify what kind of risk assessment procedures should be performed by the auditor. Has it any relation with the listing of the company proposed to take place next year? Yes. So there are a couple of questions. One, that because the position, financial position of the company has changed. So you can see that, yeah, financial position of the company has changed. So what are the risks? What are the risks? And therefore, what should be the risk assessment procedure which the auditor should perform? Number one. Question further asks you that if the company is in the process of getting listed next year, so will it have any relation? Yeah. So I'm hoping you have understood the question. Huh? Okay. Yes. Over to you. Quickly. So Rishita says, misstatement in current asset is the risk and liability to get good response from public. Okay. Hardik says, audit risk in relation to analytical procedures and risk assessment procedure to be performed is to check overstatement of current assets. Okay. Dipali says analytical procedures. Akriti says misstatement is a risk. Analytical procedures need to be performed. Okay. Then I think Amit says observation and inquiry. Yeah. It may be enhancing its position. So I'm just, so I think you are just trying to say they are overstating the numbers. Huh? The numbers are fabricated. Yeah, sure. Ajay Surya says analytical and observation. So these are the risk assessment procedures which should be looked at. Sure. Sampada says misstatement of current assets and the liabilities. Analytical procedure should be performed. Okay, great. So now, if you look at the scenario, one thing has happened. What has happened? Current assets of the company has gone up. This is clearly evident. Yes or no? Current assets of the company has gone up. That is what you can see clearly. Correct? If the current assets of the company has gone up as compared to the previous year, so what sort of procedure do you think is going to be really relevant? Analytical procedures. Yeah. Now, over and above analytical procedures, one can always say perform inquiries from the management. Why? Because you want to inquire from the management as to what has resulted in the increase in the current assets. Yes or no? But this inquiry is something that you will do on the basis of this analysis. So that's why this analysis becomes important. Huh? This analysis becomes important. Yeah. And will you want to corroborate that with some evidence, with some data, with some information, with some record? Of course, you can do that. So that's why observation, inspection, they can also come into picture. But whether you perform inquiries, whether you get onto inspection of the document, for both of them, analytical is something that you need to begin with. That you need to begin with. Okay. Now, as far as the listing of a company is concerned, now please remember, if the company is in the process of getting listed, as we've just discussed in our previous example also, any company which is in the process of getting listed or once this gets listed would always want to showcase its better financial position. Yeah, that is going to help the company on an overall basis in terms of its market capitalization, in terms of valuation of shares, all of these factors. Yeah. So that's why whether this may have some relationship with the company getting listed next year, you never know. You never know. So of course, one can say that maybe the company has inflated the current assets. So this risk may be there. Now, please remember, we are not saying that this has necessarily happened. Every time as an auditor, you are not saying a mistake has been made. What is your outlook? You carry a risk. Okay, you carry a thought that this may have been done by the management. So may have happened means possibility of this error is there. Whether it's intentional, unintentional, so that is something which you are going to look at in more detail. Understood? Understood? Everyone clear on this? Any questions so far? Quickly. Yes. Any questions? If you have, tell me. So I can see this response. Okay, so Pallavi is asking, sir, in this question, why only analytical procedure followed and not others? No, as I told you. So analytical procedure is something which you will begin with. Yeah, so that's the point. That's the point. Omkar is asking, sir, what if the auditor's assessment go wrong? Then of course the audit objective will not be achieved. Audit objective will not be achieved. Yeah. Okay. All right. So I think Tushar is clear on this. Great. So all right. So let's continue now. Okay. So Mohammed is asking, sir, can you please explain analytical procedures once more? Yes, sure. See, as far as the analytical procedures are concerned, so there are a lot of analytical procedures. Okay, Mohammed, and you are going to discuss that in greater detail. But as of now, just to help you understand, if you, let's suppose, compare your last year data with current year data. For example, last year employee cost was 100. Now it has become 105. Okay. Now, if this has increased, if this has changed, so what is going to be your first thought process, first analysis? That salary cost has gone up. Now, what could be the possible reasons? Maybe there was an increment during the year. Or if you say no, increment was not there, number of employees have increased. Or it could be a combination of these two. Yes or no? So this is how you analyze the data. This is what you do in case of analytical procedures largely. Okay. Shini is asking, So in the previous question, in the listing process, there are intermediaries who help the company to get listed. If there's any if there's any chance of audit risk, what is the credibility of these institutions? See, as far as credibility of all of those institutions is concerned, so that's a listing process. Okay, so we are not commenting anything on the listing process. What is our objective? To check whether the financial statements are free from material misstatement or not. Whoever is supporting the management is not of any concern to us, because for us, anyone, or you can say everyone, who is part of the company, who has supported the company in terms of preparation of the financial statements is concerned. What do we call them as? Management or the company or the client. As an auditor, what do we need to look at? That the financial statements which have been produced to us, whether that is free from material misstatement or not. Understood? So that's the perspective you need to look at. Yeah? Mohammed seems to be clear on this. Okay, Kasak is asking, sir, can you please explain the second part? I don't understand the second part of relationship of listing of the company with this. See, please understand that if you talk about a company today, so there are two types of companies which are possible, Kasak. A company may be listed or unlisted. Now, as far as listed is concerned, if the company is listed or is in the process of getting listed, so what will happen? Company will invite funds from the public. Means public interest is involved because public will infuse funds in this. Okay. So public at large will be involved in this. So the moment any such thing will happen, a risk will increase. Why? Because the stake interest of public gets involved. That is the first part to begin with. Number two, for such companies, what is going to be the objective? So if let's suppose a company wants to get listed, so company would want to get listed at a higher price. Why? Because company will get more money if the valuation will increase. Yeah. So for increasing the valuation, there will always be a risk to manipulate the information, to manipulate the financial information. So that's the correlation. Understood? So we're just trying to understand that will this result in additional risk for the company or not? Clear? Then I think Omkar is asking, sir, can the company fire the auditor and appoint a new auditor due to modified opinion by the previous auditor? See, I think the way this question has been put up, I won't say yes or no. Why? Because it's not about firing the auditor or appointing the auditor. So it's a relationship, wherein both of the parties get into the discussions. They decide whether the auditor needs to continue or not, whether the management doesn't want to continue with that. Okay, and that's how these are generally decided in an amicable manner. Okay. All right. So, any more questions on this quickly? Any more questions on this? Then we'll move further. Quickly? No? Hardik is saying, sir, I have a question. Yes, Hardik, please go ahead. Then I think we can just move further. See, even though we are saying we'll move further, we are not going to change as far as our topic is concerned. Our topic is going to be largely same. Okay, so something that we are going to discuss will be more of around the topic that we are going to look at. Tambeshwari is saying, sir, please look at my query. Yes, please. Please put down your query. Anirudh asking, sir, if the auditor makes the wrong conclusions but the management is right, so the audit objective will not be achieved. As simple as that. Yeah. But why will that happen? So that's the question. Why will that happen? Why do you think this is going to happen? That is another point you need to maybe understand, analyze that why do you believe auditor will do any sort of thing? Okay. Hardik is saying, sir, is the depreciation under analytical procedures? See, each and everything could be there under analytical procedure. So depreciation also. Tambeshwari is asking this 4-step analysis, identify, observation. See, I'm not clear on the question. So you have not put down the question. Okay. Maybe I can just come back to your question later on. Let's move further on this. Okay. Now, as we discussed that in relation to the risk assessment, understanding the entity is important. Understanding the environment in which the entity operates is important. Understanding the internal control system of the entity is important. Yes or no? Yeah. Did we discuss that or not? We didn't get into details of that. But remember, for the risk assessment, we discussed this is required. Yes or no? Quickly, tell me. Remember, this was the part that we touched upon. Yeah, Dilip says yes. Great. Dishika says yes. Great. So now what we are going to do is, we are going to discuss this point in detail. So if this understanding of the entity is required, understanding of the environment is required, how will the auditor do that? So we can understand this is required. We understand this is important. We understand this is required for risk assessment. This is required for identification of risk. But how will the auditor do this? What are the ways to understand the entity? What are the ways to understand the environment in which the entity operates? Okay. Now, this is something that we are going to look at. All right. So now, in relation to this understanding the entity, I would say that understanding the entity involves understanding of the business, its processes, and this again, in a brief manner, we have discussed in our previous sessions also. So this is not going to be something again very new to you. But for the purposes of our detailed discussion, there are few points into which this understanding of the entity and its environment has been broken. So let's try to read those points and let's try to get on to the understanding of all of those points. If let's suppose you are required to audit DLF Limited. Okay. Let's suppose you are required to audit DLF Limited. Do you all understand DLF Limited? It's a company. Tell me quickly. DLF Limited, you all understand it's a company? Yeah, everyone? Yeah, hopefully you know about this company. Great. Pawan says it's the real estate company. So which means that if you want to get on to the audit of this company, what do you need to understand? The industry in which this company operates. Means the relevant industry. If let's suppose you don't have any knowledge of real estate, forget about this company. Huh? Forget about its business, its contracts. If you don't have any understanding of real estate, will you be able to perform the audit? Tell me, will you be able to perform the audit? Bhaskar says no. Nuruddin says no. Yeah. Nayan says no. So that's why what is important to begin with? To begin with, it's important to understand the industry. Industry in which the company operates. Yes or no? Industry in which the company operates. Because only then you will be able to make out some of the relevant points for the purposes of performing the audit there are certain factors which are attached to a particular industry. For example, in case of banks, laws and regulations could be different. Yeah, Banking Regulation Act. Do you think that will be applicable to a manufacturing company? RBI Act. Do you think that will be applicable to a manufacturing company or a real estate company? The answer is no. So that's why understanding of regulatory aspects which are relevant to that particular industry, you will not be able to know. So let's suppose if you go to a manufacturing company and you ask the client that what is it that you have done in respect of RERA. RERA is a law which is relevant for real estate. Now, for a client which is in manufacturing sector, do you believe RERA is going to be applicable to them? No. And if you don't understand that, if you don't go and ask those questions, so what will happen? What will happen? Client will understand that you don't know anything about the company. You don't know anything about its industry, about its business. So that's why understanding of the relevant industry regulations which are applicable to them, various external factors which are going to be relevant in relation to that particular company, that particular industry is extremely important. Is extremely important. Yeah. So there are a lot of things. Some of the companies may have business which is seasonal in nature. Yeah. So for example, if you talk about a company like Voltas, okay, can you tell me what is the nature of business of this company Voltas? Anyone? Anyone? Hardik says AC. Bhaskar says they are into manufacturing and sales of AC, air conditioner. Now tell me one thing. If you observe that maybe in winters or sometime in third quarter means the period from October to December or say January to March. Say in the last 6 months, their sales have gone down. If let's suppose you put across this question, so you should understand that they are in the nature of business which is more of seasonal. So such type of fluctuations in the sales will arise. And you will be able to understand that. You will be able to appreciate that if you understand some of these aspects which are related to the business. And how do you do that? Only and only when you will understand the industry regulatory aspects or various other external factors which could be relevant in the context of the client. Yes or no? Yeah? All right. Next, you should also understand about the nature of the entity, its operations. Means what is the business of the company? What is the business of the company? If let's suppose you go to a company, you don't understand the business. You don't know what is the company doing. You just simply go and ask for a trial balance and you start performing procedures. Do you think you will be able to do that? You will be able to check, you will be able to design the audit procedures? Tell me. Tell me. Pranav says no. Omkar says no. What about us? Dipali says no. Ranjit Ranju says no. Why no? Because till the time you don't understand the business, how will you be able to plan your audit procedures? How will you be able to plan your work? Will you be able to plan that? Not at all. For a company, you also need to understand what is its ownership structure, what it is governance structure, means who are there in the board of directors, whether the audit committee is applicable or not, whether they have audit committee or not, what is the hierarchy of the business. Yeah, there are a lot of factors around the entity you need to understand. What are the plans of the company? Yeah, what are the future plans of the company, whether they have got some investments or not. If they have invested, what types of investments do they have? Do they have also have got investments in subsidiaries, joint ventures, associates? Yeah. So how is this entity structured? Whether they have obtained funds, whether they have got borrowings, whether they have got equity funds only. Is this going to be relevant to the auditor? If this understanding is obtained, of course, yes. Why? Because more and more understanding the auditor will obtain. The more and more understanding the auditor will obtain, what is going to help? What is going to happen? What is going to happen? Can you tell me? If more and more understanding is obtained by the auditor, what is going to happen? How is this going to help the auditor? Tell me quickly, how is this going to help the auditor? Yes, quickly. How is this going to help the auditor? Omkar says he'll understand the nature. Yes, of course. But how is this going to help the auditor? Avinash says it becomes easier for him to plan his work. Very good. So it's a very, very simple point Avinash has clarified. That it will become easier for him. There is no doubt he will perform his procedures. But by doing this, it will become easier. Yes or no? So let's suppose, let me just put across this question to you. Let's suppose you don't attend this session today. Okay. Let's suppose you plan not to attend any of the sessions around audit, anything. And you plan that you'll go to the exam, you'll just read this book, something you'll understand, something you'll not understand. So will you be able to appear for the exam? Answer is yes. Will you be able to answer the questions in the exam? Answer is yes. Yes or no? Of course, you will be able to answer. Though such process may become difficult for you. Such process may become difficult for you. Again, I'm not saying necessarily it will become difficult. It may become difficult for you. Yeah. So that's why what is important? It's important that you go through this, you understand this. So how does it help you? It makes your process, it makes your life easier. Exactly, that's the thing which the auditor plans to do. Yeah. So he's just making to make the things easier for him, simpler for him. Yeah. Now, as around the financial statements, auditor will want to look at the accounting policies which the company has selected, the reasons why they have been selected. Yeah. What are the objectives? What are the strategies of the business? What are the risks of the business? Remember, risks are the one which are also identified by the management, which are also identified and looked at by the management. It's not only that the auditor is going to look at, management will also identify its objectives, its strategies, and accordingly will also look at the risks which are attached to the business. There are a lot of ways through which management will also be looking at its financial performance. For a company, it will not happen that the company will just prepare and will not check anything. Do you believe it will happen? Do you believe such thing will be happening? That the management will just keep preparing some data but will not look at that. Will it ever happen? Do you think so? No, this will not happen. Yeah. So management will also have some ways. Maybe they are checking it on a quarterly basis. Maybe they are checking this on a monthly basis. Yeah. Maybe every month they do this comparison that in the month of April, how the numbers have changed as compared to March. In the month of May, how the numbers have changed as compared to April. Yeah. Similarly, they may think that Q2, how this Q2 has performed as compared to Q1. Q2 means quarter 2 as compared to quarter 1. Similarly, how the second half of the financial year has performed as compared to first half. Yeah. How has the profitability of the company improved? How did it improve as compared to the last year? How the revenues have improved? So there are a lot of KPIs, key performance indicators, which the company will look at. So some of the companies may want to look at the current ratio. Yeah. The ratio analysis is something they may want to do. So all of these factors, till the time this is not really understood by the auditor, will he be able to make the audit procedures in an appropriate manner? The answer is no. Now you may have a question that, sir, all of these points are understood, but this last point is not clear. Why? Because if there is a way through which management is looking at its number, reviewing its financial performance, how is it going to help the auditor? It's important, huh? It's important. So let's suppose if you get to know how the examiner will review your paper. So when you go and attempt your exam, yeah. So what is going to be the evaluation mechanism? So will you be able to prepare that in a better manner or not? Yeah. So the same thing is there. Management is the one which knows its numbers, which knows its data. And auditor will also want to understand how the management reviews that. What are the checks in place? What are the ways? What are the controls which the management has put across? Why? Because this will also help the auditor. This will also help the auditor. Understood? Yeah. So all of these things, do you believe will help the management? Will help the management in terms of getting onto the better understanding and thereby getting onto the better process assessment, better designing of audit procedures? Tell me, yes or no? And tell me one thing, that should this only be limited to the planning stage or should this continue throughout the period of the audit? Tell me, should this continue throughout the course of audit or should this be limited to the planning stage only? What are your thoughts? Pranav says it should continue throughout. Exactly. Pooja has got the same answer. See, it's a part of planning. And remember that during the course of audit, lot of new things, some of the new points, some of the new information may come up. So that's why this understanding should not stop at a particular stage. This has to be a continuous process. This cannot be cut down at a certain level. Yeah? Yes or no? Clear on this? Everyone clear on this? Any questions, any doubts if you have? Because we are going to look at few questions then. Any questions, any doubts? Quickly, huh? We are going to look at few questions. Great. Everyone is clear. Great. So let me just put across some questions, huh? And let me just test your knowledge. All right. So let's look at this question. Auditor of ABC Textiles Limited chalks out an audit plan without understanding the business of the entity. Since he has carried out many audits of the textile companies. Okay. So he has performed audit of various other textile companies also. There is no need for him to understand nature of business of ABC. Yeah, so that's the thought. So please try to understand. So let's suppose this is the textile industry. In the textile industry, there are various companies. Okay, let's suppose these are all companies. They are all in textile. Correct? Yeah. So one of this happens to be ABC Limited. Now, the auditor of ABC Limited has also audited various other textile companies. Let's suppose these have also been audited by the Same auditor. So that means auditor has the knowledge of textile industry. Okay. But now comes the question that because he has the understanding of the textile industry, why? Because he has carried out many audits of various other textile companies. So that's why there is no need for him to understand nature of business of ABC. What do you think? Do you agree with this or not? And if yes, why? If no, why? Over to you quickly. Quickly, yeah. What do you think? Okay, Niveta says that even though he audited more similar companies, he will have to understand. But why? My question is why? Then I think Afzal says no, scale of business might be different. So he's saying understanding is required. Omkar says, I disagree with this. Every business has got some peculiarities. They are different. So that's why this understanding has to be looked at. Then Hima says, without understanding, they can't do anything. Why? Because each and every company may not be operating in a similar manner. Avinash says, not every organization will be of the same scale. Their nature of operations could be different. Yeah. So let's try to understand this point. See, as far as the industry is concerned, so we are clear that all of these companies are into textile business. But within the industry, some of them may be into trading, some of them may be into manufacturing, some of them may be into manufacturing as well as trading. Yes or no? Then the size of the companies could be different. One may be too large, other may be too small. Some of the companies may be quite leveraged. Leverage means company has taken a lot of debt. Some of the companies may not have taken debts. Yeah. So the structures, the internal assessment by the management in some of the companies could be very, very strong. Their controls could be very, very strong. For some of the companies, it may not be there. So that's why to make a generic statement about every company, to say that each and every company will become same, and therefore if one company in a particular industry is understood, so that's why other companies are not required to be looked at. Will that information, will that assessment be correct? The answer is no. That's why in this case, the assessment of the auditor should be what? That even though he knows the industry, he still needs to understand what? ABC Limited's business, its nature of operation. So what is it that he is going to look at? Nature of ABC Limited. Nature of ABC Limited. How will you look at? By understanding its operations, its ownership, its governance structure, if at all it has got any investments. Okay. How it's been structured, how it's been financed. Yeah. What are the policies, procedures? What are the accounting policies of ABC Limited? What are the objectives, strategies? What are the related business risks of this company? What are the ways through which measurement and review of business financial performance of ABC Limited is carried out by the management? So all of these points in relation to ABC specifically, should be looked at by the auditor. Clear on this? Everyone clear on this? Yeah? Everyone clear? Any questions, any doubts if you have? So we have got some more questions. We are not yet done as around the questions, but I think we can take a break. Okay, maybe after the break, we'll continue with our discussion. Okay, and of course, we'll pick up some of the questions first and then we'll continue with our discussion. All right, so I think let's take a break. Okay, and then we'll continue. Yeah. All right. So welcome back. So let's continue with our discussion. Yeah, everyone back? Great. So we'll now be discussing some more questions. All right. So let's look at this next question. While auditing the books of accounts of Heavy Material Limited, so it's a company for the financial year 22-23, a team member of the audit, means there's a team member of from the audit side, showed no inclination towards understanding of the business, understanding the business environment. Is the approach of this team member correct or incorrect? What are your thoughts? And please also let me know that if he doesn't want to understand, how is this going to impact the audit? Over to you quickly. Yeah. So this is how these questions are going to be structured. Yeah. So it's very, very important that you attempt this. Yes. Over to you. What do you think about this approach? About this team member? Do you think this is appropriate? Yes or no? And the reasons for saying that. What do you think? Should this be done? Yes or no? If no, why? If no, yes. If yes, why? And how is this going to have an impact on the audit? Omkar says approach is wrong because it won't help in planning the audit. Assessment of the audit risk. Whether he's saying incorrect, his role will affect the planning as a whole. Very good. Amit is saying it's not appropriate. Ratimalini is saying it's incorrect. Why? Because once it is understood, only then he can prepare the audit plan in an appropriate manner. Yes or no? Yeah. And it's like very, very clear to everyone. Yeah. Bhaskar is saying that this will have an impact on the audit. Yeah. Vaishnavi is saying it's incorrect. So this is not something which he should do. Sukhveer is saying that if he didn't understand, then the opinion may have impact. Okay. So this may get impacted. So this may have serious consequences. Why? Because each and every audit team member is important because the team will perform the work. If the team member will perform inappropriate work, then either the review will increase, it means the review of the seniors who are going to supervise this, their work will increase, or the overall objective, overall audit quality will get deteriorated. Yeah, and I can see a lot of responses from Anirudh, Dishika. Great. Yeah, Mohammed is saying this is incorrect. Very good. All right. So let's look at another question. Prince Blankets is engaged in the business of blankets. Its major portion of sales is taking place through internet. Means more of sales are online. Advise the auditor how he would proceed in this regard as around understanding the entity and its environment. Now, it's a very, very specific question. Before you really get on to answer this, please try to understand. It's a very, very specific question. In this case, you are not required to comment whether this understanding is required to be obtained or not. Whether the understanding of entity and its environment is required to be obtained or not. No, that's not the question. That is something which is already specified. Means understanding of the entity, its environment is required. Question is asking you, how should this be obtained in the context of this company? So it's very, very specific to this company, to this business. Okay. So now accordingly, you need to design, you need to think through what is it that you will do. So let's suppose if you are the auditor of such a business, what is it that you will do to understand the entity and its environment? Please remember, to understand the entity and its environment. Okay. Ranjit Ranju is saying checking the online sales, understanding the business of online sales. Great. Bhavna says understanding the nature of business, factors, strategies. Muskan is saying go through the online sales. Means just go through the understanding. Check the bank statements as well. Okay. Sai is saying talk with the CTO. Know the apps. Means the apps which the company may have been using to carry out sales, the platforms which are being used. Sudeep is saying, understand the e-commerce model. It appears to be more of that. So that understanding is again something which is required. Now, when it comes to the online sales, yeah, so definitely there's a risk. There's a risk. Yeah. So that's why what is it that the auditor needs to do? Auditor needs to take care of this risk. Auditor needs to evaluate this risk. He needs to identify that risk. How will he do that? He will have to get on to the understanding of the nature of the business. Yeah, he will have to understand the policies, procedures. Yeah, as to how does this business model really works. So business model he needs to understand. Already mentioned in point number 1 though. He needs to also look at the structure as to how this business is really structured. And there could be a lot of other points. But can you just see how simple this is? So this is how the questions are going to be put up. Yeah. So tell me one thing that bases some of the points that we have been discussing. And all of these are actual questions which have been picked up from study material only and which you should also be expecting. So do you believe you will be able to answer some of these questions? Yes or no? Quickly. Do you think you feel comfortable answering some of these questions? Yeah. You don't need to elaborate too much. Can you just see the solutions also? Yeah. You don't need to elaborate too much. The whole thought process is that the idea has to be very, very clear. You need to be very, very clear and concise. Be very specific while you answer that. And if you do that, of course, you are going to get appropriate marks also. Yeah, everyone clear? So I think before we proceed on this, any questions, any doubts that you may have? Yes, quickly. Any other questions, any doubts that you may have? Then we'll move further. Okay, yes, Sai, what's the question? Okay, so Srini has a question. Srini is asking, sir, how the auditor will come to a conclusion of a risky business without checking sufficient appropriate audit evidence? See, that is something which the auditor needs to assess. Srini, yeah, whether the business is risky or not, if there are risks which are attached to the business or not, that is precisely what we have discussed so far. So this risk assessment is all about doing that. How will he do that? He will get on to the understanding of the business, its environment, its controls. He will perform inquiries. Yeah, he will also be performing a lot of procedures through which he'll get to know about all of these things. Yeah, so we cannot say that there will be a database, he can just go and check, or there will be a checklist, he can just go and fill. See, all of this is a overall process. And during the course of this process, which process is that? Audit process. He will get to know about a lot of information, about a lot of things. Okay, basis which he'll be able to decide all of this. Yeah, clear? Clear on this? All right, so now I think we can move further. Okay, so now please remember that our discussion is around this risk assessment. Okay, let me just quickly, okay, so now our understanding around that risk assessment is continuing. If you remember, we discussed that for the purposes of risk assessment, if you go back, if you look at that, let me just quickly take you back. So what I'll do is, as around this risk assessment, there are few points we had discussed. What were those points? Understand the entity. Remember? Its environment. Remember? Its internal controls. All of these are required for what? Identification and assessment of risk of material misstatement. So please remember that our identification and assessment of risk of material misstatement, this topic has been continuing. Okay, so it's like the same topic we have been continuing, but we are getting into more and more details. So you can say we are doing a deep dive in respect of this topic. First of all, we discussed how will you do this. Okay, what are the procedures auditor will look at? What is it that he needs to understand? So he'll understand entity. We talked about how to understand the entity, how to understand the environment. We talked about it. Now we'll talk about how to understand the internal control. Okay. Yeah. So can you now understand the flow? What is it that we are trying to do? Everyone clear on this? Yeah. I'm just hoping that you are clear on the flow. Huh? So it's all same thing which has been continuing. So we have not yet completed our first topic. So we are still on that very topic. Okay. And in relation to that topic, we are doing a deep dive. So now our third point as around this topic is all about internal control. Yeah. And I think there was a question which was put across in between and somebody asked me, sir, this materiality. I think some of you who are following this study material, so you may be thinking, sir, materiality. Yes, of course. So each and everything will do. Okay. But let's not get on to the exact flow over there. So if there is something we have skipped, we'll do that later. Okay. Don't worry. All right. So now moving on to the next point, and that is about internal control. Now, what do you mean by internal control? How will auditor understand internal control? Now, this is something which we are going to discuss in more detail. Now, internal control, even though we are going to discuss now, if you remember, we have already discussed in the previous sessions also. Yes or no? Quickly tell me. Anyone, any thoughts if you have about the internal control? Quickly. If you can just tell me any understanding. Please don't look at the study material, read that and answer. No. Anything that you understand in a very simple, in a very layman language. I don't want any technical answer from you. Anything that you understand about internal control. Very good. So this very simple response comes from Vedehi. She's saying management checks. Very good. Shini is saying checks and balances. Great. Akshara is saying controls of the management. Very good. Then I think Sudip is saying something which is implemented by the management to control its works. Great. Yeah. So I think each and every one of you has tried to answer this and in a very, very simple language. And please remember that if you are able to answer this, okay, so please don't really go by the language. Huh? That means you understand the concept. Okay. Now, with the same understanding, so please remember, I'm not going to change your understanding. Something that we have discussed, we are going to do a deep dive on that. So that doesn't mean we'll now change our understanding. So please keep your understanding exactly similar. Huh? Our understanding is not going to change at all. Okay. Now, let's try to look at the technical definition of internal control. Technical definition means how the auditing standard defines internal control. Okay. Every time we'll talk about an internal control, please remember, it will always be the control of the management of the company. So internal control means internal to the company. Please remember, it has got nothing to do with the auditor. Auditor was only required to check that. Okay. So every time a control will be set up, put up, brought in place, who will be responsible for that? Can you tell me? Who will be responsible from that? It will always be the company. It will always come from the company management. Yeah. So now with that understanding, let's try to look at the technical language. And by the technical language, please don't get confused. Huh? Okay. We are going to go back to our same simple language. So what I'll do is I'll also analyze this technical language, and you will find that automatically will reach our same simple language, something which you already understand. Okay. Now, what do you mean by internal control? So the standard says it's a process, means it's an activity, or you can say it's a set of activities designed, implemented, maintained by whom? Those charged with governance. Now, what do you mean by those charged with governance? It means board of directors, audit committee. So that means company only. Those charged with governance means board of directors, audit committee means company only. By management, other personnel of the company means it's a process. Who will design this process? Who will implement this process? Who will maintain this process? Personnel of the company. It could be the board of directors, it could be the management, it could be any other personnel. Okay. Why would this be set up? To provide reasonable assurance. So what is the objective by bringing internal controls? To provide reasonable assurance about achievement of objectives of the entity. Means why are they set up? So that company can achieve its objectives. And what are those objectives which the company would want to achieve? There are 4 objectives. Reliability of financial reporting, effectiveness and efficiency of operations, safeguarding of assets, compliance with laws and regulations. So let's try to understand this one. So the auditing standard says that management or the company will put up a process. Why will that put up a process? So that company can achieve its objectives. Is that understood? Answer is yes. Is that understood? Yeah. Is this limited part understood to you? That it's a process will be set up by the company. Why? Because company wants to achieve its objectives. Now let's try to understand what are the objectives which the company would want to achieve. 1. Financial reporting. What does it mean? Financial statements that it will prepare, they are reliable. So is that the objective of the company? Answer is yes. That the operations which the company will carry out will be effective, efficient. Okay, great. Company is able to comply with the laws and regulations, means there is no non-compliance of law. Okay. And assets of the company are safeguarded. And assets of the company are safeguarded. So now any such process which the company will set up in relation to all of them, some of them, what do you call it as? Internal control. Internal control. Simple, easy to understand. Yes or no? Is it simple, easy to understand? Yes or no? Yeah. Is it any different from what we had discussed? Is it any different? The answer is no. Aisha says no. Great. Bhavna says no. Very good. So now, what are the objectives which you will achieve? Financial reporting will be reliable. Operations will be efficient. Company will not non-comply any sort of laws, regulations. company will safeguard its assets. Great. It's good to understand. Now, if all of those objectives are achieved, then how will it benefit the company? Now comes the question that if all of those objectives are achieved, then what will be the benefit for the company? See, as far as the company is concerned, there is clearly one benefit. What is the benefit? That company will be able to achieve its objectives. Yes or no? Yes or no? And that's what the company would always want to do. So if a company has been set up, for example, let's suppose company has set up a factory. So what is going to be the objective? That the infrastructure which has been put in place, furniture and fixture which is there, plant and machinery which is there, building which is there, okay, electrical installation which is there, all those assets are safeguarded. All those assets are safeguarded. Will that be the objective of the company or not? Tell me. Will that be the objective? Answer is yes. So I think as far as the company is concerned, we are clear about the meaning of the internal control. We are clear about the purpose. We are clear about the benefits which the company will derive out of this. But we are not really bothered about the company too much. Why? Because our concern is more in relation to the audit, or you can say the auditor. So now let's try to understand that how this internal control will help the auditor. What are the benefits which the auditor will derive, which the audit team will derive by understanding these internal controls? Because what is it that we are doing? Identification of risk, evaluation of risk, for which entity has been understood, its environment has been understood. Now the auditor will get on to the understanding of the internal controls. Auditor will get on to the understanding of internal controls. So now let's try to understand as to how this is going to help the auditor. Okay, and let me give you one example. With the help of this example, let's try to understand. So let's suppose auditor is required to check depreciation working. So there is a working of depreciation. Which has been prepared by the company's personnel. Okay. Now there are two companies. A Limited. In case of A Limited, company has a process. What is the process? One person will prepare the working, other person will review this working, and then it will be given to the auditor. Understood? In case of A Limited, there is a process. What is the process? One person will prepare the working, other person will review the working, and then it will be given to the auditor for his checking. There is another company, B Limited. This company doesn't have any such process. So this company says whatever a person will prepare, give it to the auditor. Which out of these two companies you believe will be carrying lesser risk as far as any errors in this working is concerned? Where do you think chances of error will be lesser? Muskan says A. Hardik says A. Gerald says A. Can you tell me why A? Afzal says A. Anjali says A. Can you tell me why A? Why in case of A, chances of error will be lower? Vibhor says because it's reviewed by one person before being provided to the auditor. So that means there's a check in place. What do you call this check in place? As internal control. So in case of A, in relation to this process, one internal control has been established. Okay. There's an internal control which has been established. Now tell me, if you were the auditor of A Limited as well as B Limited, where will you become more comfortable? In case of A or B? If let's suppose you are doing audit of both the companies, where will you become more comfortable? In which company your comfort will be higher? Everyone, I think, Anirudh, they are saying it should be A. Okay, great. Now, I think Manvi is also saying A, Mohammed is also saying A. Okay, great. Now tell me one more thing. So one more question. Let's suppose the audit team member. Okay, let's suppose there's an audit team member, say Ram. Say Ram is the audit team member who is required to check this working of depreciation. So what is the role? So work has been divided and Ram has been assigned the task of checking of working of depreciation. Okay. And Ram is the auditor for, there is the same auditor for both A Limited and B Limited. And Ram happens to be the audit team member for both the companies. For A as well as B, Ram is the team member. And because he understands depreciation calculation, that's why he has been assigned this task of checking depreciation working for both the companies, A Limited as well as B Limited. Okay, clear on the question? Everyone clear on the question? Yeah, this fact pattern is clear. Okay, now let's suppose Ram is not aware that A Limited has any such process that one person will prepare, other person will review. Okay. And he doesn't know about B, that only one person prepares and who prepares gives that to the audit team for checking. Now in such a case, what do you think about Ram? Where do you think his comfort will be higher? A or B? In this case, knowingly that Ram doesn't know anything about this internal control, where do you think his comfort will be higher? Where do you think his comfort will be higher? Anirudh is saying it will be same for both. Muskan says same for both. Pallavi is saying nowhere. Can you tell me why? Why same for both or why nowhere? Can you tell me why? Can you tell me why? Whether he says Ram should know because it is the duty to know the operation. So that is of course understood. But I'm saying, what if he doesn't know? Rishita says because internal control is not known to him. Because if he doesn't understand the difference, that A Limited has a good process, good internal control, so will it really matter to him? So he will treat both these companies in a similar manner. Yes or no? In case of B Limited, the chances of error are higher. So that's why his extent of checking will be more. Ram could have saved his work. How? By checking lesser in case of A Limited. Yes or no? Why? Because in A, there is an internal control put in place. An internal control has been put in place, but he doesn't know. So if he doesn't know, what will happen? What will happen? Will he be able to understand that his risk is lower in case of A? No, he'll not know. So that's why what will happen? His extent of checking will remain same. Or you can say his identification of risk for both the companies will be of the same nature. Yeah. So that's why this understanding of internal control helps the auditor. So how does it help the auditor? One, auditor will be able to identify the types of potential mistakes. Something which is possible in case of B. Auditor will be able to identify the factors that affect the risk of material misstatement. And accordingly, auditor will be able to design nature, timing, extent of audit procedures. Why? Because for A, auditor will do lesser work. For B, auditor will always want to do higher work, means he will want to check more in case of B as compared to A. As compared to A. Clear on this? Everyone clear on this? Yeah. So this is how understanding of internal control is important for the auditor. And if that is not followed, then what will happen? Auditor will not be able to maybe benefit from that, or you can say lose out from some of the important aspects which are attached to that. Clear on this, everyone? Hardik is saying yes, sir. No, sorry. I think Manvi is very clear. Okay, Hardik is saying, but sir, even if there is even if there is internal control, then also there is a control risk. So the extent of checking by RAM should be same according to me. Am I correct? See, no, it's not correct. Why? Because control risk, whether it's there or not, that also needs to be evaluated by the auditor. And how will the auditor evaluate that? Please remember that what is it that we are trying to do? We are trying to identify, evaluate what? The risk of material misstatement. That is being done right now. And for doing this risk of material misstatement contains two risks. Remember, inherent and control. So that means auditor is trying to evaluate these risks. So how is this done? How is this being done? By understanding the company, its environment, its internal controls. Understood? So for evaluation only, this entire exercise is taking place. Okay, so this entire exercise is taking place. Now clear on this, Hardik? Yeah? Clear on this? Quickly. Great. So Hardik is clear. Okay, great. So now there are some limitations also attached to the internal controls. Let's try to understand. Please remember that internal controls, they cannot provide 100% assurance to the auditor. Yes or no? Can they provide 100% assurance to the auditor? Answer is no. There are human beings who are involved in this entire exercise. So even though control is put in place, human judgment is involved, human beings are involved. So that's why some element of error may creep in. So we are not saying that we will ignore that. But this risk one needs to understand. At times, people may come together. They may form groups if, let's suppose, they want to commit a fraud. So there could be a collusion. They may come together. They may want to intentionally bypass the controls. Yeah. Some of the things may involve judgments. For example, estimates. For example, estimates over which judgments are involved, which are again based on approximation, wherein 100% accuracy is not possible. Even though there are controls, there are chances of error. Yeah. In case of small companies, forget about a system or a process. Employees are not good enough. Yes or no? For example, if you talk about a very small business, say only 8 persons are there, only 5 persons are there. For such a company to set up this complete process, to have risks, to have controls mapped to them, this entire exercise would be too expensive, may not be required. Why? because those are largely driven by the owners. Yeah. So these are some of the limitations one needs to understand. Even though controls are there, still some of these limitations will always remain. Manvi is asking, sir, what do you mean by collusion? Collusion means people forming groups, or you can say they coming together. Okay, let's suppose there are let's suppose two persons. Now, what is the role of these two persons? To pass bank entries. Okay, say this is A, this is B, and they have a supervisor C. C is who? Supervisor, who also checks, reviews work of both A and B. Yeah, so that no fraud is committed, no errors are there. But what if A, B, C, they join, they come together, they decide they want to commit a fraud? So what will happen? They are colluding. Okay, so thereby, even if management has put a control, so what's the control? That these two persons will do the work, C will check. But what if they come together? This limitation could be there. Okay, so we are just trying to understand some of the limitations which are attached to this process. All right, Manvi, clear on this? Great. Then I think Ranjita Ranju is asking, sir, please explain in case of small entities. Great. So let's suppose there's a small company. Okay, let's suppose there's a very small business wherein only 5 persons are working. There are only 5 persons. So one is the owner and 4 employees are there. So for this company to come up with processes, for process, what will happen? They will have to identify the risk. They will have to put down the controls against those risks. Yeah. So this entire manual, they will have to think, okay, they will need people. So let's suppose if you want to put a check in place, what do you need? Every person will do some work and there should be a reviewer. Let's suppose all these 4 persons are doing the work. So you'll need maybe 2-3 more persons to review their work or not. So you'll have to increase the team to bring in internal controls. Otherwise, can you put the internal controls in place? No. So that's why if you do that in case of a small setup, in case of a small company, so what may happen? Costs may increase. So that's why in case of small entities, generally these are largely driven, control by the owner, wherein you may not have too much of internal controls the way they are required to be set up. Understood? Understood? Yeah. Okay, great. So now I think we can just look at some examples to get more clarity. Okay, so let's look at some examples and then I'll come to your questions also. All right. Auditor GR and Associates appointed for audit of P&G Limited. Okay, it's a manufacturing company engaged in the manufacturing of various food items. So what is the nature of business? Manufacturing of various food items. So that's the nature of the business. Yeah. So this is the nature of business of P&G Limited. Its auditor is appointed. Who is the auditor? GR and Associates. It's the auditor. And this is the company. Okay, so this is the company, this is the auditor. While planning an audit, auditor does not think that it would be necessary to understand internal controls. Okay, now tell me, in this case, what are your thoughts? How will you advise the auditor? Tell me quickly. So auditor believes that understanding of internal controls is not required. What are your thoughts on this? Over to you. I think very straightforward question. Quickly, huh? What are your thoughts? Great. So Hardik is saying if the auditor does not take into consideration internal control, then the extent of checking may increase. Dilip is saying, no, it should be checked. Ajay Surya is saying, auditor may believe it's a waste of time, which is fine. But what are your thoughts on this? How will you advise the auditor around this? Yeah, Pallavi is saying auditor will have to understand the internal control. Why? Because it will help him in identification of the risk and also assessment of the risk. Okay, great. Then Anirudh is saying it's better to understand the internal controls. Why? Because it will result in better identification and assessment of risk. And of course, it will eventually help in better planning of further audit procedures. Sudip is saying it will help in understanding the various audit procedures. VR says necessary to understand. Why? Because it's important for the risk assessment. Great. It's important for the risk assessment. The auditor has to understand this. There's no doubt about it. Although most controls relevant to the audit are likely to relate to the financial reporting, not all controls may relate to the financial reporting. Yeah. So auditor needs to decide which all controls are going to impact the financial statements. But of course, its understanding is extremely important. It's critical to the audit process. Okay, it's critical to the audit process. Yeah. All right. So let's look at the next question. Team member of auditor of Simple and Easy Limited was of the view that understanding the internal control of the company would not help them in any manner in relation to audit procedures to be applied while conducting the audit. Okay, so that's the thought of team member. So there's one team member. Okay, you can say there's one team member who has this thought. So what do you think? What will your advice be to this audit team member? Aisha says he should understand the internal control. Why? It will reduce the risk. It will reduce the risk of material misstatement. Vibhor says one, to save time and energy. Why? Because eventually the audit planning will be better, to discover areas of potential misstatements. I think this is very much on the similar lines which we have just discussed. Yeah, in the previous example also. Yeah, Hardik is saying this thought is incorrect. Why? Because it helps in preparation of the audit plan. This risk assessment. Bhavna says internal control will help the auditor in terms of reducing the risk, in terms of better planning the work. Yeah, and I think same is the response from Dilip, Vaishnavi. Yeah. Yeah. Okay, Sai is saying thought was appropriate with regard to internal inappropriate. Okay, great. Why? Because this will have an impact on the entire work of the auditor. Yes, absolutely. This will have an impact on the entire work of the auditor. So if you look at the solution, so it says this view of team member is incorrect. Clearly, why? Because understanding the internal control would help the auditor, his team members, in designing the nature, timing, extent of audit procedures. Yes or no? Yes or no? Yeah, everyone clear? Any questions, any doubts if you have? Quickly, huh? Any questions, any doubts? Over to you. Yeah, so I think Sai has a question. So I think everyone is clear. Sai is yes, Sai. Please go ahead. What is your question? Quickly, huh? So let me just see. Some of you have questions. We can just discuss the questions, huh? Quickly. Yes, Sai, quickly, huh? Please go ahead with your question. So Hardik has a question. Okay, I think you need to unmute. Maybe if you can just unmute, please. I ask if you can just unmute sign. Okay, so maybe what we can do is we can just conclude our discussion for today, and what we can do is we can just now discuss your doubts, your questions around this stuff that we have discussed so far. All right, yeah. So let's put across your questions, and some of you who don't want to continue, they can just feel free. So thanks once again, everyone, for your time. So we're just going to continue with our discussion in the next session. But of course, your questions is what we'll discuss now. Yes, Sai, please go ahead quickly. Hardik has a question. Yes, Hardik, please go ahead. Ayaz, can you unmute them?
Hello.
Yes, Hardik, please.
Good evening, sir.
Good evening.
Sir, I have a doubt from chapter 2. Sir, can you please explain the consequences of non-documentation of audit procedures?
See, there's a very simple consequence. So that's how you should always consider. Something which is not documented is considered as not done.
Yes, sir.
Okay. So if let's suppose you are talking about some work, it could be related to anything. So forget about chapter 1, 2, 3. So we are just talking about audit in general.
Yes, sir.
So if auditor has performed some work, so say the team member comes to the senior or maybe the audit partner, or maybe tomorrow some regulator picks up the auditor, and auditor says that everything is in my mind. I know everything. I've checked everything, but if required to produce the audit evidence, he says I don't have anything in writing, anything in written form, anything in soft form. So in documented manner, it's not available. So what will then be considered? It will be considered as if that work has not been performed. So if you don't perform any work, so can you tell me how will that have an impact on the audit?
This means that we have not, if anything is not documented, it means it is not performed.
Yes. So that's going to be the consequence.
Sir,
okay? And there are a lot of administrative problems as well. So let's try to understand. So say, for example, in case of an audit, say there's a team of 6 persons.
Yes, sir.
Okay. 4 are junior members and 2 are senior members.
Yes, sir.
And what is the role of senior members? That junior members will keep checking a lot of information, and they will come to the seniors, and seniors will review them.
Yes, sir.
Now, for seniors to review their work, will the juniors be required to document that?
Yes, sir.
Only then the seniors can review?
Yes, sir.
Yes or no? If let's suppose junior has worked for 3 days. He performed inquiries, he checked depreciation, he also checked payroll, he also checked cost of goods sold, a lot of other areas he has checked. Now he goes and meet the senior on 4th day. And senior says, okay, give me the files, give me the workings. And junior says, no, I have checked everything, you asked questions to me. So what will happen? So will the senior be able to review?
No.
Or you can say re-performance will be required. So everything which the junior has done, senior will have to sort of repeat that.
Yes, sir.
Yeah, so there are a lot of administrative aspects which get attached to it. So that's how this is going to have an impact. So you can say overall audit quality, its effectiveness, its efficiency will go down.
And sir,
previously one
just a second. Please let Hardik complete. Yes, Hardik.
Sir, is there any legal consequences as well if audit documentation is not done?
Yeah, of course. So as we discussed that tomorrow, if let's suppose any regulator picks up the auditor.
Yes, sir.
Okay. Let's suppose audit is subject to peer review. Yeah. Yes. So let's suppose tomorrow a reviewer comes and asks for the information from the audit partner. Audit partner says, I don't have the document. So what will happen? Any sort of penalties, okay, which are there as per the law, they can also be subject to that. Yeah. So there could be a lot of legal implications.
So, sir, audit plan, audit strategy, and each and every procedure which we perform in audit has to be properly documented.
Of course, yes. Extremely important.
Okay, sir. Thank you, sir.
Sir, Sai Kiran.
Yes, Sai.
Sir, previously in one question it was told that a company is going for internet sales. In that, what I am presuming that because of internet sales, there will not be any credit sales, and because they are having a lot of cash flow, there will not be credit purchases also. Can we presume like that, sir, before going for audit?
Not necessarily, because uh, generally you'll get to see that. But if let's suppose they have some business model, okay, wherein some sort of credit is passed on, okay, or let's suppose till generally as you rightly mentioned, it will be more of cash sales wherein the credit will not come into the picture. But this thought is not really going to help you. Okay, why? Because you need to be again not very specific as to what is going to be the business model of the company, and that is what was not required in that question as well. So it was more of quite generic, which was specific to the risks which are attached to that, not really attached to the transactions. Okay, so let's not try to be too transactional. Let's try to focus more on the business model. Okay, so that is how you should take it.
So because of that, to compare it to previous year, there should be definitely a reduction in receivables and payables. That's what I'm asking.
No, but not necessarily. Why? Because if you are talking about the business model is online, and if you let's suppose say that there are no credit sales, so of course the business was same in the previous year as well. So we didn't say that the business has changed in the current year. So some of that thought process can come in wherein you say that in the previous year it was both online and offline. In the current year, it's changed to only online. That is where you can draw this conclusion, which you just mentioned. Otherwise, that conclusion will be inappropriate. Yes or
Okay,
no?
okay. Yes, sir, yes, sir. Okay,
All
sir,
right.
thank you.
Sure. Then I think
Sir?
Sai Charan, you have a question. Sai
Sir,
Charan?
Hi,
sir,
sir.
I have one small question.
Yes.
Sir, can you please explain the measurement and review of the entity of financial performance once again?
Yes. So when it comes to the company, so auditor needs to understand that what is the review mechanism which the company has been following. Okay. Now let's try to understand with the same perspective uh, with which we are trying to understand the internal controls. Now, are you clear on the meaning of internal controls?
Yes, sir.
Okay, great. And do you believe that understanding of internal control, or you can say setting up of internal control in some way or other will help the auditor?
Yes, sir. It will help in audit planning, audit procedures, risk assessment,
Sure.
and all
So
the.
exactly similar is the case of review mechanism. Now, what is a review mechanism? So we are saying that internally, when the financial statements are prepared by the company, for example,
Yes, sir.
okay, or if let's suppose they prepare any financial information, say inventory valuation they prepare.
Yes, sir.
So what is their review mechanism? How do they review it? Because when the management will look at the inventory as at the end of the year, let's suppose they find it is 40 crore. So they will have some checks in place. They will also have some review mechanism through which they will check whether this number of 40 crore looks okay or not. Yeah. Will they do this or not?
Yes,
Yeah.
sir.
Similarly, let's suppose in the current year, management has a profit. Let's suppose company has a profit of 18 crore.
Yes, sir.
Now, will the company be reviewing their profit or not? Yeah.
Yes, sir.
So now this entire review mechanism which the company is following in relation to its financial performance, in relation to various ratios. Okay, there are various ways through which they will do this review. So now, if the auditor will also understand that this is how management looks at its financial performance, its financial position, its financial numbers. So how is it going to help the auditor? One, his comfort will increase. Why? Because he'll get to know that yes, management do have a process of doing this review. Number one. Second, if the process is there, auditor will also get some insights. Maybe auditor also wants to follow a similar process. Okay, which could be an independent checking, something which the management has done, but the auditor also wants to perform similar sort of checking. Yeah.
Yes,
So
sir.
exactly similar to what you find in case of internal control, you can say is something which will apply.
So, sir, auditor will definitely check the relevance of those controls that are performed by the management.
Yes,
Okay, sir. Thank you, sir.
sure.
Hi, sir.
Hi.
This is, sir, my doubt was regarding the audit risk. In the last section, my voice was not clear. Sir, let me put up my doubt in an example. Let me assume
You need to
a
be a
person.
bit louder, please.
Let me assume, let's say, a person called A has a business. He has a doubt that he might be inappropriate to manage it, and he employed a management a person or a board of directors to manage them. So here, now he get a doubt that first initially he has a doubt or risk arising from mismanagement of the business. Now he put a person in place to manage it. Now he has a risk that the mismanagement might happen due to the inappropriate person. So to check the work of the management, he appointed an auditor. I suppose as auditors management's works like financial statements. Uh, so in that audit risk we are discussing, we are keep on tracking on the flow of risks. Uh, Here the business risk might be treated as an inherent risk of the business, uh, which uh, and the management risk flows to the auditor, and the some risk might be flow from auditor to the shareholder rights as a business owner, because the auditor may fail to perform his duties inappropriately. Then the entire risk is the final barrier is the shareholders are the true owners of the company. Is my thought was correct, as because as you have been saying that a flow of risks from management to auditor, is that and then
No,
is
your
this
understanding is absolutely correct so far. Yes, please go ahead.
is this the auditing standards? Is that the procedures which are the tools given in advance to the auditor to prevent the risk from flowing to the uh, shareholders, acting like a firewall? Is that correct?
So I think in this last question, you have asked me everything about audit. And I would say you'll have to wait for all of these sessions to get completed, maybe this entire study material to get completed, because one thing about audit, I keep saying, yeah, this audit is quite interlinked. Okay. And audit, even though is divided into various sections, into various chapters, into various audit standards, please understand that audit is one. And audit is all about audit of financial statements. So once you're through with all of these chapters, you will get to know about all the tools, all the systems, all the procedures which the auditor has got in place to manage all of these risks. Okay, because what is your objective? You want to understand that how these risks can be prevented by the management at the first place. If the management is not able to prevent that, how can that be prevented by the auditor so that they do not get passed on to the stakeholders? And that's what the objective of the audit is all about. Yeah. See, just to quickly give you an overview, this audit happens to be a process wherein the auditor is required to apply his judgment. Okay. He is required to apply his professional knowledge. He is required to apply his skill set. Some of the things that we have discussed so far, you can say they are very, very limited as far as the entire audit process is concerned. In fact, if you remember about audit, there were 4 stages in which this entire audit can be broadly categorized. So far, we have not even completed our first stage. Okay, forget about remaining these 3 stages. So now, in respect of all the 4 stages which the auditor is required to complete, okay, through which this audit process will pass on, and with the skill set, with the knowledge, with the expertise of the auditor, the expectations are that all of these things get filtered in a way that some of these risks, which may turn into a material misstatement, will be taken care of by either the management. If not by the management, then of course by the audit. But yes, there is a limitation. And yes, there is an inherent risk in the audit process also, that some of the risks may not be taken care of by the audit. Some of the misstatements may get skipped, which could be material. Okay. And exactly that's why we keep saying that the auditor is required to provide reasonable assurance and not absolute assurance. Okay. So I would say there are two ways in which your question can be answered. One, that we have already discussed, that this absolute assurance can never be achieved through this audit process. Number two, how this reasonable assurance can be achieved. So I think wait for some more time, wait for all of these audit procedures to get completed. I think with each passing session, which each chapter getting covered, you will get more and more clarity as to how audit is quite capable of taking care of most of these risks. Okay, so that is how I'll be able to put it across right now.
Thank you, sir. So my next question was regarding we have gone through an example, right, sir? Food manufacturing company, understanding of internal control. As I was from a district of Tirupati, it relates me to the recent issue of an laddu making in Tirumala, sir. Is that to be treated as an failure of the quality control, internal control, or due to failure of the auditor in checking its quality regarding the procurements of raw materials? If it is not a pilgrim center, if it is a big company who is producing and rendering it, what would be the impact on the auditor, the practical scenarios? As we are
Great.
speaking
So
about
see, there is one more point around the internal controls. And in fact, there are a lot of components of internal control which we plan to discuss in the next session. But let me just quickly give you a brief overview that audit is all about financial statements, okay, which we have been discussing right now. So any of the activity, any of the risk, any of the internal control, which will have an impact on the financial statements is something with which the auditor will be bothered. If let's suppose quality of food products of the company is not meeting the quality standards, so there are two implications which may arise due to that. One, its sales may go down. Does it have got anything to do with the auditor? No. Why? Because that's an operational risk. Whether the sales of the company is going down or up doesn't matter. Important thing is that whatever is the sale, that should be reported. Second implication, there's a regulatory risk that if the quality is not meeting the required standards, some penalties may be levied. So there again, because it's a financial implication, that is what the auditor can look at, that if this financial implication will arise, whether that has been accounted for in the financial statements or not. Understood? So to answer your question, that in such a case, if the quality is not appropriate, that is not going to impact their financials. Yeah, understood. So that is not something which the auditor will focus on. That's more of operational. Something which is going to impact the financials is what will bother the audit. Clear?
Okay.
Sir, also one thing. Sir, auditor, we have seen in the scope of audit that auditor is not an expert who will check the qualities and all. So that's why also it will not impact. Like in plant
Not
and machinery.
necessarily. Yeah. See, auditor cannot be an expert in everything. But the point is that if he's not an expert, then he may have to bring in some experts who can help him on this process. Provided that is going to have any impact on the financial statements.
Okay, sir.
Okay, for example, let's suppose auditor says that on telecom, I don't have any idea. Okay, I don't understand anything about telecom as far as their legal implications are concerned. Fine. So he may bring in one legal expert who will help him during the course of the audit. Is that important for the auditor? Yes. Why? Because this can have an impact on the financial statements. Second scenario is the one which you just mentioned, that a product has been manufactured, a food product has been manufactured, its quality is bad. So that's why there are no customers. That's why its sale is lower. No worries. So let's suppose if the sale is only 1 crore, management wanted 10 crore. So that has got nothing to do with audit. Why? Because 1 crore is what will be reported in the financial statements, and the financial statements are appropriate. Okay, clear?
Yes.
Great. Any more questions on this?
So may I ask?
Yeah, sure.
So internal controls have two perspectives. they have two benefits that on one hand, internal control helps the employees to understand best practices and put them into action. On the other hand, internal control helps the companies define the responsibilities and segregations of the duties within the organization, immediate and long-term securities as well. So, but the organization is only as strong as its weakest link. That is the people. It depends upon the internal people.
Right.
So, is it a boon or a curse to the organization?
You tell me, what do you think? What are your thoughts?
Sir, I think it is a boon.
See, please try to understand it in this manner. If let's suppose you come across a company, or let's suppose there are two companies. So one company has got good, strong internal controls. Let's suppose whenever you go there, you find there's a guard at the security gate. Okay, he'll just make a record of each and every person who is entering the company, who's leaving the company, so that any suspicious person doesn't enter, because they may bring in some harm to the assets of the company. There's another company, they don't take care. So they are saying, let every person come in. Why? Because we are all human beings. Okay, and all of these things can happen at any point of time. Which out of these do you think you'll find better? Company first or company second?
The first one.
First one, of course. Why? Because even though there will be some limitations which will be attached to the internal controls of the company, still you can't say that will not put those controls in place. Why? Because your thought process is what? Your thought process is to improve, to bring in efficiency, to bring in effectiveness. And that's possible only when you will put the internal controls in place, and you will just make sure that those are also operating in an effective manner. Yeah. You can't just simply say that, okay, these can also be breached. So for example, you may say that company first is good, they have a security guard, but what if that guard is not doing anything? Okay, so they are not making anyone record anything on the register. So whenever I go there, guard keeps sitting, or maybe he's having a chat over any topic with any other person. So of course, all of those limitations could be there. And for that thing also, company will have some more checks, some more procedures in place to take care of that aspect. Understood? But to say that this should be ignored altogether will not be right. Clear on this?
Yes, sir. Clear. Thank you.
All right, great. I think Ranju has a query.
Sir, I had a question.
Yes.
Sir, my mother-in-law working as a government auditor. She was
Right.
retired. She was retired 2019.
Okay.
On private hostel, give a proposal to her within a
Private?
private hostel.
Okay.
Invite to audit their accounts.
Okay.
There are not auditing done past 5 years.
Okay.
So they are set a time limit within 8 days. You should need to complete it audit within 8 days.
Right.
It is possible to. It is possible.
You tell me, what do you think?
She rejected the proposals.
So what's the reason? So forget about whether she rejected, she accepted. What do you think you should look at whenever any such proposal will come to you? So let's suppose if you were asked to perform this work, what is it that you will check?
I thought it is not possible within 8 days.
No. So I'm not asking you whether you'll accept or not accept. I'm saying, what is it that you will check before accepting or not accepting? On what basis you will decide?
There is no audit done within past 5 years.
No, so I would say the way you look at is that if you are required to do something, what is it that you will always check? You will check that what is going to be my scope of work and what is going to be the time frame. That is what you call as your planning broadly.
Yes, sir.
Yeah. So you may think that, okay, that I'll have to do 20 audit procedures, which will take me, say, 20 days, a team of 5 persons, whether I have got that much resources available or not, and that much time frame available.
Yes, sir.
That's how you will take the decision.
Yes,
But
sir.
client says no, you will not be able to take that much time because we don't have the time available. So that's how you will take the decision. Huh?
Yes, sir.
Okay, because it's all about providing a service.
Yes, sir.
It's all about providing a service. Yeah. So
Yes,
for
sir.
example, this chapter that we have been discussing. Yeah, this chapter.
Yes,
Now we have taken 2 sessions so far. Yes or no?
Yes, sir.
Yes, sir.
And some more sessions are going to continue as around this topic on the same chapter. Yes or no? So let's suppose if somebody comes to me and says that please finish off this chapter in 1 hour. So what will I think? I'll think that whether I'll be able to do this in 1 hour or not. So it's a service which I'll have to perform. Accordingly, I'll take the decision. So same goes with the audit or same goes with any other work. Understood?
Yes, sir.
All right.
Thank you, sir.
But sir,
Okay,
terms
great.
of services are decided by the auditor in the engagement letter in mutual understanding of the company. No, I am correct, sir.
See, it's a mutual understanding always because there are 2 parties who have come together. They want to work on something. So that's why it always has to be a mutual thing.
Okay, sir.
Okay. All right.
Excuse me,
So
sir.
yes.
So the point on which Sai Charan was saying, the agenda he raised, sir, in that case, the auditor is responsible for all the activities because it also consists of food department, health security department, and the total responsibility is concluded on the auditor. Is this appropriate?
Of course not. Of course not. See, please try to understand that for a company, for a business, who is running the company? Is it the auditor or the company or the management?
Management.
Management. So if let's suppose something goes wrong, which the auditor was required to look at. So can you say that the person who is running the business, even though he also appointed someone to check, should not be considered as the person responsible for that?
So that will be responsible person.
That will be the responsible person. So that means company management, they will always be responsible. Come what may. Why? Because they are the persons who are driving that company. Over and above that, if there is a reviewer, checker, or anybody who has been appointed, and if he has not performed his work in a diligent manner, then he should also be penalized. Yeah, but one who is primarily responsible for that, he will always be held responsible. He cannot just escape his responsibility saying that I appointed this person to come and check. He didn't check, so that's why I am not going to be the one responsible. Why? Because he was the one who is responsible for this. Understood? So that's how you are required to look at all this. Okay.
Yes, sir. Sir, as per my point of view, the auditor is responsible for only the financial crisis, not for the food quality.
Of course, yeah. So coming to your point also and elaborating on that, that even for the financial aspects, auditor will be responsible to the extent he has not performed his work in a diligent manner. Management will also remain responsible in respect of that. Why? Because primary responsibility even for the financial aspect is that of the management. Understood?
Yes, sir.
All right. So I think we can conclude our discussion here.
Yes, sir.
Okay, great. So thanks everyone for your time once again and for this wonderful participation. And my request before we conclude that you need to revise this. See all of these points, particularly in a chapter. It's very important that you come with revisions. If you lose out previous points, then of course that gets disconnected with the next part that we are going to do. So that's why please make sure you revise before we meet next. Okay. So thanks so much, everyone. We can close this now, Ayaz.